So welcome guys. This is analysis of euro against the US dollar. As you can see, my chart is so let me remind you guys I don't use indicators. I don't normally use though indicators are one of the things you need to use when trading, but I don't normally use them. I trade price action. Understand? I trade price action. So the market has been on a decisive moment, uptrend, downtrend, but let's say it's changing momentum to the uptrend side. So let's mark it out from the edge of last week, like let's say last Friday's trade. So at the edge, watch it. Let me use my triangle to show you guys what I'm talking about. Come in. Let me use my triangle to show you guys what I'm talking about. Yeah, you can see from the edge of the last Friday's higher high, or that's the nearest high high we have for now. So let's just take it like that. Yes, there straight straight to where the market is right now. So to tell you this is a live market. This is not a replay or something. This is a live market. This is not a replay. So this is the last week higher high, as you can see over there. That's the last week higher high, which means the market was in a downtrend last week and this week, and the short time for this week, which is the market is changing momentum. I don't know. So let me show you the difference between a fake out and a breakout in the forex market. So this is what we'll be teaching today: fake out and breakout in the forex market. So as you can see, this is a breakout. This is a breakout. A breakout. After a breakout, see there, this is a breakout. After a breakout, there will be, let's say, a correction. I don't know what you guys call it, but me, I see it as correction. So I'm coming. That will be the correction. The correction over there. Yeah, after the correction, you get the continuation of the trade. You can see there, the continuation of the trade to the upside direction, which is you have to target the last higher high, or the nearest higher high to say. The nearest higher high. So as you can see, the nearest higher high, that's where we should be targeting now. So I'll show you where the next higher high is. The next higher high, which is the last week higher high. As you can see there, the last week higher high. The last week, let me mark it down. The last week higher high, yes, over there. The last week higher high. You have to target the last week higher high. The next higher high, I mean to say. So you can see simple and sure. That's how I approach that. So let me call that so you understand what I'm saying. Some people don't get what I'm saying here. So I'm coming. Oh no. I don't need to use that. Let me use the color so you guys understand better. So let me use the color. No, the color. The shifting. Yeah, the callouts. Let me use the color. So I see. Color to show you guys what I'm talking about. So that's a breakout. The breakout. 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 Shit. Yeah, that's a breakout. That arrow now pointing there, that's the breakout. That is what we know as breakout. I know you do hear traders say breakouts, false breakouts. False breakout is normally known as fakeouts, but this is a breakout, correction, and continuation, as you can see. So that's the breakout. So let me show you what a continuation looks like. Let me point out so you people get it. Let me mark it out. So let me use this. Then I'm gonna get out. So there, yeah, there. That's the correction. That line. That's the correction. Say. That's the correction. Correction. Yes, that's the market correction. Which means you have to wait for all this to happen before entering a trade. You have to see all this before entering a trade. So after the correction, there will be a continuation. And before you enter the continuation, a continuation trade. So we have to be looking out for these things. Let me say just 10. A bullish Enfiagen candle to show that price has really making up his or mind to go upwards. Let me use my normal chart system to show you guys what I'm talking about. So let me use the buy and the long positions on here. So this is where you be looking for that bullish and final candle to enter and target the last high, and your SL should be a little bit below the correction in case of any liquidity sweep or something. But your stop loss should be a little bit below the correction. As you can see, that's how you trade, man. That's how you trade. Simple. Your chart don't need to be messy. No need of drawing different lines or something. So, no need of just can see I just drew only two lines, which means we are good to go. So let me teach you guys what a fake out looks like, how a fake out manipulates traders, how a fake out fails some traders. So let's just watch. Let me use my yeah, but how fake out fail if they fail traders, fail high profile traders. So let's go. So I can see this is a fake out. Then there will be no correction. So this is called a manipulation. So people that entered around that fake outside have been manipulated, like they have been liquidated or something. They've been liquidated of their money. So you have to wait for things to complete before entering a trade. So that's a correction. That's not a correction. That's a fake out and a manipulation. Understand? Fake out. What's the fake out? I'm coming chilling. Fake out. Fake out. Yes. That is what you see as a fake out. So, which means price couldn't cross that place because of big banks know how to manipulate. The institutions know how to manipulate. Maybe that place this market liquidated now was the institutional stop loss. That place now, this is not stop loss, which means the stop loss is above, above. Let me show you. The stop loss should be somewhere around, yeah, around here. Their stop loss should be somewhere around here, which means the market has liquidated 20 people. So the stop loss should be somewhere around there. That's how they trade. So you have to be thinking like the institutions. Understand? So let me show you how to trade the fake out. How to trade a fake out easily. So you don't get stocks stuff like this. How to do a breakout. So before a breakout, there must be some sign of reaction in market will show that momentum has changed or something. So let me just show you guys. You guys can see over there now is where you'll be looking for a confirmation that the market structure have shift or something. So that's where you'll be entering when the market breakouts, reverse, and then continues downward. I can see this is a breakout from for that last while or something. So this you have the market reverse and then continues down. You'll be entering around there. Let me show you my shots. Yeah. You'll be entering around there. You'll be looking for a sell position around there, and the stop loss below the last liquidity sweep, because that will be definitely a liquidity sweep. Yes, below the last liquidity sweep as considered. So that's how to trade breakout and fake out easily. So I don't know why some people just like to chase the market, then get stocks, get hits, their stop loss get hits or something. So don't trade like them, trade like a pro. So to be sincere, you guys have to join my Telegram channel where I drop trade analysis. Like I mean to say bias, yes, where the market is eligible to go. Awesome. So that's it. That's how to trade, a fake out and a breakout easily without getting stocks. So I'll be sharing this analysis on my Telegram channel. So do well to join us over there so you can see. And another thing have to be, going to your lower time frames to analyze for your lower time frames, which means the 15 minutes time frame for confirmation of trade, which means you have to confirm the trade, before going. So you have to so you have to confirm the trade before entering. So your 4 hours is for market structure, uptrend or downtrend or ranging, and the 15 minutes is for confirmation of your trade. Though this is a swing trade, but it doesn't matter. You have to do the proper analysis before you put your money over there. So see you guys in the next video. I'm 5% club.